In this week's episode of the Stockscores Market Minutes, we will review that all-important question, is there a stock market crash coming? I'll then do my regular weekly market analysis. We will do a market scan in search of opportunity, and I will look at the day trade of the week on MYOV. All right, well, welcome. So this week I want to talk about, is the stock market going to crash? We get this question all of the time, and we should understand that when markets go higher, it brings out the doomsayers who say that, well, it doesn't make any sense. This is a euphoric market, an irrational market. What we should also understand is that fear sells, and that there is a market for getting people to listen to the fear mongering. It doesn't mean that we shouldn't be careful, but we should really trust the evidence and look at what the market is telling us to do before we decide that the market is going to crash. And so let's think about it from that standpoint. Negative headlines are going to make people fearful. Fear sells, we understand that. But there's really only one thing that we need to do to anticipate a stock market crash, and that is watch for a break of the upward trend lines. We can do that on a 30-minute chart, we can do that on a daily chart, a weekly chart, even a monthly chart. If the stock market is crashing, it has to break down through the upward trend lines first. And until that happens, well, you just got to believe in the bull. Let's take a look at a couple of charts here just to emphasize what I'm talking about. So in the very short-term time frame, this is a 30-minute, 60-minute, or 30-day, 60-minute chart. There's the trend line. It's still intact until it's broken. I wouldn't even be worried in the short term. Want to look out medium term? Well, look at the daily chart. I can draw a line across the bottoms. That line is intact. No reason to be fearful. You know, back here, when the downward or the upward trend line was broken, then it was time to be a little bit concerned and the market sold off. Or here, when the upward trend line was broken, we had some weakness. But the longer term upward trend line, which kind of goes like that, is still far from being broken. And again, look at the longer term time frame. Here is the 5-year weekly chart. I can draw a upward trend line like this. I can also draw a very long-term upward trend line like that, but none of those are broken. I could draw one across these bottoms. Until those lines get broken, price is not moving down. When it happens, for example, when you get an upward trend line broken like that, yep, time to be a little bit concerned, because look what ultimately happens. But for now, as much as it maybe doesn't make sense that the market is going up like it is, you just got to believe in the bull. All right, now on to this week's market analysis, starting us off with the U.S. markets. So first up, we have the S&P on the long-term chart. You can see the weekly time frame and a nice steep upward trend. The longer-term trend fairly shallow, recently broken out. This market looks like a pretty solid one. A little overextended given how far it is above the upward trend line, but until we see a breakdown, I wouldn't be too concerned about that. In terms of breakdowns, where we watch is first this chart, which is our shorter term 30-day, 60-minute time frame, and we're in an upward trend. Yes, we had some weakness on Friday, but unless that upward trend line gets broken, then we just have to stick with that in the very short term. Moving along to the Russell 2000, this is, I think, the most noteworthy chart of the week because we broke the resistance that we've been under for many months, and that indicates we're probably headed up towards here, and that is a good sign for those of you that like to trade those smaller cap, lower price stocks because they have had their index now break out, and that should lead to strength in the weeks and months ahead. On to the Canadian markets, starting us off with the TSX, and it has stalled the last couple of weeks after that breakout. It's reasonably healthy, a couple of sideways weeks here after that initial breakout from 3 weeks ago, 4 weeks ago even. Looks solid. I think it's just taking a little bit of a break, and you see that when you look at the shorter term chart. The short-term chart already has broken its upward trend, and it's now building this pattern of broadening volatility, and that implies that investors are a little bit nervous, uncertain about what's happening. And of course, the Canadian market being heavily based on commodities, gold and oil, there is some uncertainty in those markets, and that may be causing some of this volatility until we can start to build a pattern of low volatility and then ultimately break out again I wouldn't be too eager to be chasing this market higher right now. TSX Venture has been the worst performing market that I follow, and it continues to be a bad performer. It has had, a little over a week of strength, and that makes some sense given that we fell to the long-term support zone from way back in December 2018. It's holding there, it bounced off of it, but we still need to start breaking downward trend lines, and until this gets broken, at this point I just think it could be a little bit of a bounce back in the group. There's lots of work to be done to build investor optimism again. On to currencies, and you can see the US dollar remains in its upward trend, and the Canadian dollar remains in its sideways trend. Now the Canadian dollar has fallen to some support where it should bounce, but until it bounces, I wouldn't get too optimistic. I think basically the Canadian dollar looks to be pretty stable, headed sideways, while the US market slowly triggers higher. Finally, the interest rate chart, and of course we've had that downward sloping pullback for a number of weeks, and until we break that flag, I wouldn't get too optimistic about the market for interest rates going one way or the other. Given that the trend is up, the most likely move is that the break will be up, and that would mean interest rates coming down, but I just don't think we're going to get above this range, and I don't think we're going to get below this range anytime soon, which means interest rates should ride around in a fairly narrow range, and with time we're seeing more and more stability building in that market. On to commodities, and there you can see gold is in that sort of drifting market where we're in this sort of flag pattern. No excitement here. Oil was looking good. I was hoping that we were going to see a breakout. I was waiting for the breakout, and it just didn't come. In fact, last week we had some selling pressure to end the week, and so we're back in this pattern that's basically a pennant pattern. Until we can break from this pointy tip of the pennant, we won't know really what the next leg of the trend will be. I think we're probably going to break to the upside. I thought it could have been this week, and it just never happened. So patience required, but we are starting to see the energy names, their stocks, start to get a little less volatility, starting to build some optimism. So perhaps there is something coming. I just don't think it's going to happen tomorrow. And finally, our fear chart, which is really demonstrating that the market doesn't have a lot of fear. We did have a little bit of selling pressure on Friday, and that caused this to bump up ever so slightly, but it is still in a downward trend, not any significant show of fear. So my ratings then: US stocks bullish on both time frames, Canadian bullish long-term and neutral short-term, gold neutral long-term, bearish short-term, oil is neutral on both time frames. We have a strong upward trend in the market, but its length and the distance it is from its trend line makes the market risky for a pullback. And so we want to watch for those trend lines on different intervals of time as a reason to get defensive. Right now, the shortest term is the 30-minute or the 60-minute, 30-day trend line. If that gets broken, that'll be the first phase of some profit taking, which the market is overdue for. Oil has failed to make a strong break of the downward trend line, but it still has potential, and gold is just quiet and not showing a lot of excitement. Fear continues in a downward trend. All right, so let's jump over to Stockscores and do a market scan to see if we can find any opportunity, and perhaps more than anything, just talk a little bit about how I evaluate these. So this week I'll run the abnormal breaks US scan. Now, because the market was down on Friday, we won't get a lot of candidates, but that's perfect for what we want to do here today. I'm going to view these in the slideshow viewer, so I click on slideshow. That allows me to see large charts so that I don't have to zoom in and out of them. And here you can see our first stock, ADAP. On the weekly chart, I can see that it is still below its downward trend line and therefore not particularly good at this point. There may be a trade there, and so to answer that question, I'll go to the 6-month daily chart, and I can see that on Friday there was some positive price action breaking through some really short-term resistance. The biggest problem, however, was that there was no volume. Now, of course, with markets closed Thursday, it would make sense that there wouldn't be a lot of volume on Friday, but still, I think it's lacking some of the key ingredients that I like to see when looking for opportunities. So we move on to the next one, and I'll zip by anything that I don't think has some potential. Here's MRNS. I can see on the weekly time frame it's breaking, let's call it a 3-month downward trend. I want to zoom in on that, so I'm going to click on the 6-month, and that allows me to see a little bit more detail that we can see this break of that downward trend line, a little bit of a positive price action off of a double bottom. So those are good things, but again, no volume, no enthusiasm. Given where the market is, I think you have to really have enthusiasm for the individual stock. And so I'm going to pass on that one. Novavax, again, let's take a look at the 6 months, see what went on at the end of the week. I can see that some volume came in here. There you can see volume. Price action was strong. We broke this downward trend line. However, there's no rising bottom. This is at a low, which means that no optimism has built yet. Therefore, the likely outcome is that it'll go sideways, build the rising bottom, and then down the road perhaps break. It will encounter resistance up here, so the upside is somewhat limited from a risk-reward standpoint. I think this is a promising chart, but not a great chart, and I'm going to pass on it for that reason. So this is the process. We just go through charts looking for certain patterns, and when we see something that looks good, I'll stop. But so far, not really crazy about anything. This is an example of what we would want to look for. This was a long-term breakout about 2 months ago when it broke through that resistance at 125. Now it's at 145, so that's a roughly 15% gain in just a few months. That's the kind of pattern we want. These breaks through resistance from sideways trading with some low volatility over here. Remember, this is the weekly chart, and in the ensuing 6 or 7 weeks, the stock has been moving quite nicely. And our last one is the inverse ETN on natural gas, which demonstrates that natural gas is going lower, and that is, obviously bad for those energy names, but it's not such a strong pattern to indicate lower prices ahead that I wouldn't be too concerned about it. All right, let's jump back into our presentation and go to the day trade of the week. Again, this is a trade from the past week that met my criteria. We have an action candle here at, I believe that was 936 on MYOV. For $100 of risk, required a 240 share position. That is about $3,758. You can margin those sorts of trades 3-to-1, and so we're looking at about $1,250 of capital to take that trade. By the end of the day, it had gone up 1 RR, 2 RR, 3 RR, 4 RR. You're probably wondering, what is RR? Well, that is reward for risk. And so if we risked $100 and we end the day at 4 times risk, that means we have a $400 gain on that position, which required $1,250 of capital. That's a 32% return on a one-day hold. That's a pretty decent little day trade. All right, well, that has been the Stockscores market minutes for December 2nd, 2019. Hope you've enjoyed it. If so, please click on the like button, subscribe to the channel, and most importantly, trade well.